quick. I'm running late. Hello, everybody. Sorry about that. Been busy. How's everybody doing? Afternoon. Market's about to open. Christ, it's already opened. Sorry. Dow is off. Sorry. It's really late. I got so engrossed in programming. I suddenly looked at the clock and I was like, it's 20 past. So yeah, sorry about that. Afternoon, everybody. Salty Games, Alex, Crum, Kennelly, Diamond, Yerp, Andrew, Joaquim, Daniel, Martin, Virginia, James. Oh, I could go on like this all afternoon. Afternoon, Baggy. New York waits for nobody. No, the market's already opened. I'm well late. Afternoon, Michael. Pound CAD and Euro Pound. Good trades in and out. Very good. Pound CAD. I haven't even got the market reverse alerts indicator on here. Sorry, this is the other indicator I'm working on at the moment. So I'll have a look at that in a minute. Afternoon, it's time. Afternoon, Nuno. Right. So I've been working on this all afternoon, all morning even. I don't even know what time of day it is. So this is the support resistance. Well, basically, it's an indicator for everything. Basically, so it's got the propulsion gaps in there, which you can see the big green lines. These are unfilled propulsion gaps. It's got all the support resistance levels in, which you can customize. So you can do daily, weekly, and monthly support resistance. You can have different colors, different sizes, all that sort of stuff. It does all the propulsion gaps, puts the symbol on the chart for you. Puts in your break-evens automatically and color codes them as well now. So you can see my break-even there is green. If I go to one that I've got a short on, the break-even line is red. So it does all the support and resistance, which is really what I was focusing on, just meaning that I don't have to keep drawing lines on the chart all the time. However, it does make it a bit of a mess. So I want to put some buttons on here, really, so you can turn them on and off. In progress. Afternoon, Marco. Right, let's get rid of that for a minute. Have a look at what's going on. So there's your pre-market 15-minute if you're trading it. If you're trading the pre-market 5 like Altro normally does, you've gone long and you've gone short. We've been stopped out of one and something's gone on. I don't know which way it happened, so we'll have a look at that in a minute. For the symbols name in the corner, would be nice if it can move a little to the left. Wow, funny you should say that. I've got a setting for that. So you can basically, symbol and time frame, you can offset the axis, X and Y. So you could put it to 50 off the X axis and it will, it'll move it along. Good, eh? You can shift it down as well if you want to. There you go. Down there. Good, eh? Does it all. I've thought of everything. But if there's anything else you think of, send it over. It's a work in progress still. Propulsion gap test on Euro US dollar, look. I'm out of that from yesterday, from Friday. Right. Whoa, Dow is out the lows very nicely. On the pre-market, but we'll wait and see what happens. That's a big old opening range on the Dow this afternoon. Right, we'll have a look at what's going on in a minute. Sorry, I'm all over the place at the moment. Marco, new here. Thanks for your method. Currently plus 7%. Good. Question, how ADR works? I found 10 past periods. Is the difference between EMA high and EMA low? No, it's got nothing to do with the EMAs. Go to the website. Oh, go to the YouTube channel. And go to videos, go to ADR. I really must do these thumbnails so they actually make some sense. I can't find anything on here. My God, where's the ADR video gone? There you go. Go watch that. It explains everything you need to know about ADR in detail. I'm forever trying to squint over the other one. Oh, what? That, yeah. Still think you should use salmon. For what? For the propulsion targets? Yeah. I haven't got this all set up yet, so we could use salmon. Salmon's a good color. I'm not going to be able to find salmon now. Light salmon or coral? Salmon. There we go. Trouble is, that's a bit bright, isn't it? Salmon. And targets, I think, should be green because these really are targets. So that's why I've kind of settled on a nice green color where we're going to be heading to. But anyway. What's the sentiment EA up to? I don't know. I'm not working on the sentiment EA at the moment. I've got other things going on. I haven't managed to progress that anymore. Afternoon PM. It's not even in testing at the moment. I've just had to stop that for a minute because I've got other things that I'm working on, which are much more, well, not much more, better. It's all stuff you need, but I want to use a version of the market reversal alert CA with sentiment, but I don't want to use the market reversal alert CA. If you know what I mean, which you don't, because I haven't explained it. But the market reversal alerts indicator, I think, gets you in a little late on sentiment trades, and I've been trying to find a way to get in. You weren't serious, Brian. Well, I like salmon. I've been trying to look for a way to get in on sentiment, and I'm struggling with either every strategy that I'm using to try is either getting in slightly too late or slightly too early. So I'm using a moving average filter. 5-minute opening range is long on the Dow. A moving average filter, basically, to get in and out of the trades. So I'm using a basic moving average cross as an entry signal, not an MA cross, as in two MAs crossing, but price crossing above the 5 or the 9 MA on the 5-minute chart. But I'm still testing it, and I haven't had a chance to because other things have taken over. So anyway, we'll talk about that another time. Right, so ORB is long on the Dow. NASDAQ. What we're doing the NASDAQ. NASDAQ is also long. NASDAQ's really long. There's your 5-minute opening range on the NASDAQ. That's broken out to the highs nicely. There's your high target on the NASDAQ, which is the Globex high today. And then yesterday's high, Friday's high, is up there. So we've got roughly 46-point move on the NASDAQ to yesterday's high, to Friday's high. And the Globex high, basically, today on the Dow is roughly 50 points away. Friday's high is a lot further. So gap fill's done on the Dow. That was done during Globex. About it, really, on those. Let's have a look at the ADRs. So we've only got one ADR. There's still no monthlies here. Obviously, there's no weeklies yet. We're only on Monday, and obviously there's no ADRs. You're not going to hit a weekly range, are you, if you haven't any ADRs? So the monthly basically is still flat. The only ADR we've had today is on the Euro Pound, which is a nice. Oh, look at that! Funny that. Look. It's used my break-even price as support. Thanks for that. So yeah, ADR hit today. Potential bounce point there, and that is actually my break even as well. So hopefully we'll push down a little bit stronger than that. That must be manuals I must have on that. Let me just check that one a minute. Oh, wrong one. Yeah, that's a manual. Right, so this is a manual trade this one that I've got on here. That's why those are too close together. Do I leave that on? I'm going to take that off at 125 ADR. Go for that propulsion gap. So ADR hit today basically on this one. Your reversal alert hasn't triggered yet. So reversal alert is there. Lots of propulsion targets. So obviously that reversal alert there gave us a nice propulsion gap at the highs, which is ADR high. We've got one there as well, one there as well. So this whole big strong move down, there's multiple areas basically to come back and retest on that. If you look at the hourly on it, we're coming down to this propulsion gap here. So that's where I'm basically going to target that additional position that I took down there. But we've got this area here, which I would class as pretty much filled. This one here is tested, but not filled. So we got 175 ADR to the downside, and then back to the upside up there is roughly half an ADR. So potentially decent bounce ADR reversal opportunity there when it triggers. But that's the only ADR today. New thumbnails are needed. The Bootcamp update makes a huge difference visually. Do more. Segment by common theme threads first. Yeah, basically I've been, I can't find anything. I wanted to make everything really uniform, but in doing so, everything's become really boring and difficult to figure out. So I will do these thumbnails. It's something, the Bootcamp ones obviously I've changed, and all the new videos I've been putting out are just making them clear. So I will do all of these. It's just a case of finding the time to do them, basically. So if there's any cunning Photoshop experts out there that are bored and want to do something for free, feel free. Send them over. What is ADR? Average daily range. There's a video on that. I've just posted it. I'll post it again. There you go, Emmett. That's average daily range. How do you manage drawdown on the EA? That's all covered in the Bootcamp, Kenny. So go and watch the Bootcamp. That will explain how you do drawdown control. But the EA does drawdown control automatically. It's all built in there. So at the moment, the EA set up, every time it moves one ADR against me, it takes a third of the position off. Called in partial profits and drawdown control. Okay, up to date. Sorry, a bit hectic this afternoon, isn't it? That's what happens when you turn up late. Right, Dow looking very whippy at the moment. So just having a quick look at the news. I haven't even got Forex Factory calendar open. I'm that unorganized today. So the Empire State Manufacturing Index was positive US. So that's quite a decent differential. We were looking at minus 24 to minus 17. We actually got a plus 10. So that's a plus 27 instead of the plus sort of 7 we were expecting. So that's quite a big differential on the expected result. If we look at the US dollar pairs, if you can look at the euro US dollar, that's coming down dramatically, which obviously means strength in the US. US dollar CAD having a nice little push, US dollar Swiss having a push. So the US dollar's had a little bit of a positive reaction to it. Nothing particularly dramatic though. We haven't got any ADRs hit on the US dollar pairs. Look at the state of this today. This is whippy as you like, isn't it, the Dow? So's the NASDAQ as well. Very whippy open today. We're back to square one on both of the indexes, basically back within the inside range. There's your 15-minute opening range, which is absolutely vast on the Dow at the moment. So a lot of volatility today. So yeah, if you look at all these pounds, all these US dollar pairs, everything's slightly pushing down on the US after that news, but nothing particularly strong. However, I would say we're probably going to see a little bit more continuation strength in the US. So we'll see how we go with those. Buy the NAS, sell the Dow. I wouldn't know what to do at the moment. Right now, they're bang in the middle of where they were. If you ask Bard, it will give you the ADR of the currency pairs. If you buy the indicator or the dashboard, that will give you the ADR of the currency pairs as well. You can ask Bard anything you like. It's just nice to have it as a visual reference on your chart. Bard will tell you everything, apart from how to trade. Well, it'll probably tell you how to trade, but I'm pretty sure it won't give you any information that will be any use whatsoever yet. Maybe in the future, it will replace us all as traders and we won't need to earn any money. That'd be lovely. We'll enter into the Star Trek world where currency doesn't exist. Food replicators exist. As soon as somebody invents the food replicator or the replicator in general, our civilization will completely change because there'll be no need for buying food. You can just replicate your food. There's no need to buy any product because you can replicate the product. Basically, replicators completely eliminate everything that's bad in the world, don't they? So whoever comes up with that idea and decides that they don't want payment for it, until that time, we still need to trade. So looking at the NASDAQ, we're about to break out the lows. And the Dow looks like it wants to go short as well, which would indicate strength across the US dollar at the moment. So we'll see where we go. So your opening range breakout this afternoon will have been a stop out on the long, heading down for a breakout to the downside. So let's have a quick look at downside targets. Yesterday's low, it's pretty easy in that. Yesterday's low, last week's low are your two targets to the downside. We're in a range on the NASDAQ, so that's nice and easy. The Dow, yesterday's low, which is Friday. And then going back to Thursday's low and Tuesday's low. So this propulsion gap, which kind of is filled, but 125 ADR, somewhere around there would be your second target if we break down below yesterday's low, Friday's low. Assuming we're going down, obviously. At the moment, this thing's a little schizophrenic. Stopped out of the long, so I'm flat at the moment on the Dow. Henry, do you need to make any adjustments to the EA if you are on a spread betting account? Shouldn't do. Just make sure you haven't got the spread filter activated. That's the only thing I would say, because you're going to get much bigger spreads on spread betting. Apart from that, nothing. So spread filter there, just make sure that's set to false, or set the spread filter to something for your particular broker. But the EA works on ADR. Well, it works on whatever you want. I use it on ADR. So it's dynamic. It changes with the instrument movement. Human beings have been replicating for years. I know, but replicating human beings costs me money. I know about it. I've got two I've replicated, and they cost a fortune. Does the ADR dashboard just run in MT4 window? Yes. So all the dashboards, basically, we had a question in there this morning in the Telegram group. The dashboards just run on a chart window, yeah? So all it is a normal indicator which runs on the chart, except the chart is set to completely white and none, yeah? So everything is set to transparent, basically, so that you can't see anything. Everything's turned off. So it's just a normal chart window. The Trade Manager dashboard runs in the indicator window down here, yeah, with that separator line. So you can adjust that up and down. Yeah, and this basically. You can't see it because, again, everything is set to white. Yeah, but the indicator line is there. So this is basically like that. So all you do is you just drag that up. If you got it all set to white, that is. Okay, Dow's going out the lows, just approaching the 5-minute opening range low. VPS is getting a little overloaded. It needs a reboot. Right. Okay, so that's your only ADR today is Euro Pound. RSIs are going pretty flat as well on the hourly. So all the movement we had from last week is sort of either pushed a little bit further and retraced today, or it is starting to retrace already. So I'll whiz through all the hourly RSIs. Pound New Zealand on the hourly. Extended to the upside. We're just above the 70 level, not quite extended above 75. None of these are. They're all 70 extensions. So we're extended above the 70. The reversal alert has just happened today on 5-minute. Data. So I just give my chart 6 hours to update. Look at that. Above 90 on the 5-minute RSI. Okay. Okay. So there's your 5-minute reversal alert. This morning, just on the cusp of the New York Open. So H1 extended above 70, dropped down M5. There's your reversal alert. This propulsion gap is gone. This isn't updating properly either. Something's not quite right with this chart today. Oh no, that is a propulsion gap. Sorry, yeah, look, the propulsion gap on that candle is exactly where the propulsion gap was on that candle. It just looks like it's gone straight through it, doesn't it? And obviously you've got this massive gap target down here, which we've tested a couple of times and bounced out of. This is being tested now. So that could have been your target off of your M5 reversal alert, which would have given you 39 pips, which is just under a quarter of an ADR. And then obviously a big target down there. Yesterday's high, last week's high, which is Thursday's high, is obviously your upside target where we're potentially going to get a bounce from as well. So that's Pound New Zealand extended. New Zealand dollar CAD, we looked at most of these this morning. Again, extended to the downside. This one got extended and embedded. I've got one on this already long, looking up for that target, and that target. All three of those valid at the moment. ADR there, that'd be a nice easy exit. 5-minute reversal alert you had just before New York opened. There. You would have had one earlier today as well, somewhere in London, which got invalidated towards the end of London. Look at lovely wicks there, look. So looking for a push back up there. Going to need a weak Canadian dollar and weak US dollar to be able to get up there, though. But that is nicely extended on the hourly. We were extended below the 80 level as well. It's basically same trade as that. We're just waiting for that profit take move, that ping back up into here. Exactly the same as this, look. Yeah. So push down, left two propulsion gaps in place, came up, filled them. Push down, left these propulsion gaps in place. That's what we're looking for. New Zealand dollar Swiss. Just scaled out of some of this today a little bit more. So this is pushed down further. Just taken another trade on that one. Literally just taking it on that 5-minute reversal alert we've just had there. Look, there's the entry. That's the reversal alert. So just got into another one long on this. Propulsion gap target is all the way up at 200 ADR. We've got this one up here at 150 ADR, and then we've got one there as well. So potentially there's that sort of movement, or all the way up to there. We need this Swiss franc to weaken. The Swiss franc's been massively strong. We've had a lovely wick put in today in London. They took out the Asian low. enticed everybody in long. Then they took out everybody that went long, and now they're pushing up again. So if we break that London high and hold it, that will propel us back up into here today. Then obviously see if we can get up to there. That's where I'll be exiting, up at 150 ADR. New Zealand dollar, US dollar, also extended to the downside. Beautiful support. Got two levels of support here. Be interesting to see. Just wanted to see where my support resistance indicator would have drawn that on. We got that level there. And there. That one there. Perfect. I like. So yeah, that looks good. New Zealand dollar, US dollar for a long one. Nicely extended to the downside, but again, we need this US dollar to have a little bit of weakness off of this big strong push. It will do at some point, and we'll be pulling back up into there. So that's your exit, or there, which is 125 ADR. It may well push down a little bit further, in which case, obviously, you're just looking for support levels. So looking for this area here at 100 ADR as a good potential bounce point. One of the reasons, where have you gone? One of the reasons I'm building this indicator with the support and resistance levels on is to get confluence with ADR. So when you add ADR onto the chart, you can see obviously where you've got confluence levels. So right here at ADR low is a very strong previous monthly support. We've also got a weekly support and a propulsion gap all down at ADR. So there's multiple confluences at this level. So it just gives you that extra little bit of agreement at certain points. And when you're looking to scale into positions, you can see where the most obvious spots are. One of the other things I've done with this indicator, which is quite interesting, is when you make these lines really thick, like you can go as thick as you want with it, but if you go to something like 20, you get lovely zones drawn in, look. Yeah, so they almost become support resistance zones. So you see this low here and that low there, all within this blue block. Yeah. So ADR falls well within that monthly area. So it's quite a nice way of putting zones onto your chart as well. And obviously, if you just turn off, so let's just turn off the monthlies and just look at the weeklies. So those are your weekly support resistance areas. You can see we pushed up into this area here, which became a weekly high. Yeah, and we came back up, retested that weekly high, came back up, retested it, bounced off of it, accumulated in it, pushed away, retested it, retested it, retested it, went through it. So it helps you to identify old zones as well, which will turn as, you know, they act as kind of flip zones. So, you know, if we push through this area now, that would become potential support. So when you're looking for areas to target as well, if you're going to go long on this, for example, you know you've got areas like these blue zones, which are previous support resistance on weekly levels. You can look at those as your potential targets as well, because they could well act as resistance because they were previous support, etc. And obviously the flip side of that. And when you've got propulsion gaps that fall on top of these areas as well, like this one here. Yeah. So this is a previous propulsion gap from there. That is also last week's resistance. Yeah. So again, confluence. So it helps you to identify. But I've been playing around with the thickness of these lines, trying to figure out whether I like a a big zone or a little zone, but you can obviously muck about with it and play with it. So just make them a little bit thicker so that they're, you know, it's nice and obvious support resistance, isn't it? Anyway, there you go. I'll stop waffling about that now. There's a load of ADRs just lit up. It's 3 o'clock. Dow long again. So opening range break to the upside again. Didn't get the opening range break to the downside. So basically you had a long break, stop out, long break again. This morning or this afternoon. Look at the spread on this thing today. This thing is all over the place at the moment. These wicks. We just had some news come out. So. Bank of England rate to go up by 0.25% on May the 11th. Said 33% of 61 economists. 28 said they would pause. So basically 50-50 shot of a 25 basis point rate hike. Interesting. So yeah, very whippy today. Right, let's carry on the RSIs. Pound yen, will it drop? Good question, Bella. I'm still selling the Dow. Okay, we haven't had a break to the downside on the Dow yet, though. The Dow's still bullish. Since we've opened, we haven't broken that opening range high low yet. This could go either way. It's not going anywhere at the moment, obviously. So, economists is always wrong, though. That is true, Kenny. They are very much wrong. Yen, a lot of the time. That's why it's a 50-50 shot. Yeah, 50% of the economists say it will go up. 50% say it will stay where it is. Half of them are going to be right. You watch as it comes out as 0.5 and they're all wrong. Pound yen, waiting basically. I'm short at the moment on the pound yen, waiting for some downside movement, i.e. some yen strength to come through, which we're lacking at the minute. We haven't had any yen strength at all. It has stabilized, though, over the last 3 days. So we've just come straight up into a balance, which we're in. This is day 4 of balance at previous resistance. So we are stalling out here. We've got propulsion gap target to come and complete here. We've got an old propulsion gap target to complete here. An old one which got retested there as well. These have all been tested, though. So they're like weaker because we haven't even gone there yet. But I would expect us to come back down here at some point soon. So just waiting for a drop on this. 4 hour was extended back last week at the resistance. But ever since then, we've just gone completely sideways. So sitting waiting on that one at the minute. State of this thing today. Right, so Aussie New Zealand, it's just got extended on the hourly. So these are potential shorts. Just got into one on M5 reversal there. So we just had the reversal alert. I'm in short. Aussie New Zealand. So that's extended again, just got extended to the upside. Not particularly strong extension. Nice wick though. No real support resistance there to have a look at. Back up in this propulsion gap. Looking to come back down into there. That is also extended on the 4 hour 75. So that's a nice 75 RSI extension on the 4 hour as well. So looking for, you know, a profit take move back down into there. Aussie New Zealand. Euro CAD extended on the hourly to the downside. Euro's dropping quite a lot today. I've got one buy on it from there from Friday on that RSI extension. All we've done basically is drop since then. So we've got a little bit of bullish divergence stepping in. Propulsion gap target there, which is very tiny. So I'd be looking for support, which will be down there. So somewhere around about the 125 ADR area, I would expect to get a bounce and then push back up into there. That's kind of done, isn't it? So we've got that target up there. We've got this big one up here as well. The euro is going to be increasing its rates by 0.25 to 0.5%. So it is going up. which is bullish for the euro. Obviously, at the moment, the Canadian dollar is being dragged along with the US, and the US is strong at the minute. So as soon as we get a little bit of weakness stepping in on that US dollar, that Canadian dollar will weaken alongside it, and that will give the euro a chance to push again. This is still in a bull trend at the moment. And I think obviously with the US dollar potentially weakening moving forward, because it's hitting its terminal rate, we should see this continue to grind up slowly. So US dollar and Canadian dollar potential weakness, which will give the CAD another leg up. So we might come back down and retest the lows, which is there, and that will bring us down to 72 for a bounce. Same as that, and that, and that. Euro CAD, Euro US dollar. I see extended on the hourly. Big extension to the downside. There's your propulsion gap fill. Got a long on it from that ADR yesterday. So looking for a fill there, there, and there. 3 big targets to the upside on this one. Again, same thing, just waiting for that US dollar to weaken. And then we get some bounce. 200 ADR is the next level of support on the way down. So that's a long way away yet. Obviously, that's a day or so away, unless something dramatic happens. But we got lovely targets to the upside to fill. Euro US dollar, very much the same as the Euro CAD in the fact that it's uptrend at the moment. So we'll be looking for a pullback into the 24.72 area for a bounce and continuation. Pound New Zealand I covered, New Zealand CAD I covered, New Zealand US, did I cover that? Sure. Hourly extension to the downside. So that's out of support, isn't it? Oh yeah, this is the one I looked at, wasn't it? So yeah, so we've got some nice levels of support, potentially coming down to there, get that gap fill done, and then push back up into that propulsion gap there. Obviously, this is multiple days of movement potentially. US dollar CAD, big extension to the upside, just extended above the 70 level. Looks like we're headed back up into this propulsion gap. Got this one here as well, which has just been tested once. That's 200 ADR. We've got an orphaned one up there as well, and this big one here, which we haven't touched, which is from ages ago. So US dollar CAD, dependent on what happens with oil, will depend what happens with this Canadian dollar. So if we get a big drop on oil, i.e. they come and do this gap fill, that will weaken the US, weaken the CAD, which will give the US a chance to maybe rally back up and get some of this sorted out up here. That one I would say is probably actually done. That's filled. So this is that 200 ADR target is definitely in play. That 100 ADR target is definitely in play. So looks good as a long term. We've just flipped into a downtrend on this, but obviously it's actually range bound. So anywhere down here, you would expect us to get a decent bounce and probably come back up and retest all these highs again. So it's just in a massive range. It moves a lot together, the US and the CAD, close trade partners. So you can kind of trade it in any direction. There's no real fundamental bias either way on this. Well, there is actually, it's long, but I would say now that we're hitting terminal rate on that, I would say that's probably more likely going to turn a little bit more neutral now. So, but the bias at the moment is long. So on that one long, so there's a nice extension on the 4 hour, which is bouncing very nicely. And obviously to the hourly, you're bounced now to the upside. I've obviously got positions on 4 on this, got in on that one, waiting for that bounce up off of this support, and that's basically when we shifted to the downside. So we got that really weak US dollar. So still long on it, still loads of upside targets, just waiting on that one. And US dollar yen we kind of looked at, didn't we? That's extended to the upside. Looking for some shorts on this, waiting for the yen to strengthen up. 2 targets there, big propulsion target there, orphaned. Actually, that's probably done. So 3 targets to the downside. That would be lovely. So we'll see if we can get into another short on that one. I've changed the EA this morning, by the way. So everything that's running on the hourly is now running. I'll just close something else out. 5. A euro pound. Yeah. So everything that's running on the hourly now I've changed the ADR distancing to 0.75. So the entry is now 0.75 instead of that was 1. So I've just tightened that up a little bit so that it gets in a little bit quicker, so that we don't miss out on some of these, because that's one of the reasons why this US dollar CAD is as it is at the moment. So because of the spacing here, that didn't give me enough exit. Whereas if it had been 3/4 of an ADR, that would have been an out. So it's a little bit too far away, one ADR, I think, at the moment. 50-50 shot. Sure, I know the answer. New indicator. Any chance of adding a stock option for longer trends? Or quick reversal scalping? Stock option? What's that mean? Stock option. You mean stochastic? Well, stochastic is an indicator. I don't need to add stochastic to anything. It is an indicator. Not sure what you mean there. Right, so there's your hourlies covered. 4 hourlies are very much the same. Aussie dollar, New Zealand dollar, really nice extension above 70. You have to clarify that one, Salty. We've got a divergence on the RSI in a propulsion gap with a target to the downside, multiple targets to the downside. Long term, this is a nice short. So we're looking for that continuation down. We're just putting a little pullback in at the moment on this move. That's part of a much bigger move to the downside. So looking for that to carry on going short at the minute. CAD yen, 4-hour extension. We know all about this one. Been in 4 positions on this now. Been scaling out of this continuously. Just can't get a break on this yen at the moment. We've got a lovely resistance area coming up here. So waiting for pushback back down into these. Just need some yen strength, which we're just not getting right now. So colored weighted volume is another to add to your platform. Mix and match tweaking by the user group. No idea what you're talking about, Play Salty Games. Sorry. You can't use volume in Forex because there isn't any. There is no volume in Forex. You can't use weighted volume because there is no centralized exchange for Forex. So you can't get volume data. You can only get your broker's data, which is useless because everybody's going to get a different reading on it. I don't know what you mean. Sorry, you've lost me. Swiss yen. Extended to the upside. Nice reversal. Just got that on M5. No, sorry. Where was that from? Oh, yeah, it was there. Sorry, it was last week. So, yeah, all we've done basically is pushed up. Divergence on the RSI. Again, Swiss yen, we're just waiting for that Swiss franc to weaken, which it looks like it is today with the euro. So when the euro weakens, the Swissy comes down with it. So really nice extension there. Again, just waiting for that profit take. Huge, strong move there. Just waiting for some kind of profit take move on this. You see my target is down here in this propulsion gap. So just waiting for us to get down there. Euro yen, that's the same as the Swiss yen. Yeah, so that's coming down nicely now. Target is down there. Starting to reverse beautifully. So we're just waiting for a profit take move on that. Again, as the euro comes down, the Swiss franc will come down with it. If we get some yen strength at the same time, maybe tomorrow morning during the Asian session, that's really going to come down hard. So looks good, that euro yen for a short. Pound CAD. That's basically extended down there. 5 minute you've already had today. So your entry was down here basically for the long. Kind of missed that one. M15, similar. So this is an M15 retest now. So if this retests here, that's going to be your W pattern reversal on the 4 hour. So this is a beautiful spot as well, 24.72 bounce. So this is where we look for bounces often. Again, need some weakness on that Canadian dollar. Pound Swiss extended to the downside. That's starting to tick up nicely now. Again, missed this one this morning. That was the entry there, which unfortunately I didn't get on because it was too close before I changed the settings. So 70 is ADR. That was 65 pips. So if I'd have had that set to 3/4 of an ADR, I'd have been in that, and the average would have been brought down, but I wasn't. So still having to wait on that one. But Pound Swiss nicely extended on the 4-hour, ticking up nicely now. Haven't got the reversal alert on the 4-hour. You have just got one on the hourly. So there's your reversal, and looking for that retest and push back up into this propulsion here. I kind of need to take one on this, don't I? I'm just going to leave it. I'm going to let it run. Let the EA handle it. New Zealand dollar CAD. So that's pushing down very hard. Nicely extended on the 4-hour. We've got a good support level that's just broken there. We looked at this one, obviously, didn't we, before? So long drop. There's no real obvious support resistance areas on this. We got this area here, which is a previous high, which is likely to turn into a support. So hopefully we'll get the bounce there, back up into there. Nicely extended. Just waiting for the profit take move to start. Again, Canadian dollar strong with the US. All these propulsion gap targets to the upside still available. That one's probably done. That one is done, obviously. So that one's in play. That one's in play. That one's in play. There's loads of targets. Just waiting for the next profit take. So big, strong push down. Waiting for that pullback. Getting that profit take when it occurs. But that's nicely extended. Ready for a long. Hourly, obviously, we're already in on the hourly M5 reversal alert. So the H4 M15 or H4 M5 still in play now. Ready to go. And New Zealand dollar Swiss extended to the downside. Again, we looked at this one. Oh, no, it wasn't on the hourly, this one. This was another one. So New Zealand dollar Swiss, 4-hour extension. Nicely down there below the 25. Waiting for a pullback up into these gaps. 3 of them. 4 of them, actually. There's a really old one back up there, which is in the 24.72 area. So potential push back up to there. This low here is roughly ADR. So that's where I would expect us to start to find some support and bounce back up into that area. So profit take on that move there. Then potentially continue down on more Swiss franc strength. But obviously that you can get in now if you're not already in it. It's nicely extended, ready to go. There you go. Stochastic. I know what a stochastic is, play sorty games. I just don't know what you want me to do with it. I use RSI. Stochastic's too fast. Stochastic will just get you into 1,000 signals. Well, 1,000 market conditions. Stochastic is a... you can use stochastic as a signal indicator or as a market condition indicator. But it's too fast. So if you put a standard stochastic on a chart, look how many signals you get. Yeah, whether you're using it as a signal indicator to get you into trades, i.e. on a cross of the stochastic lines, or whether you're using it as a market condition indicator to indicate extended conditions, you get too many signals. Look at it, just signals all the time. It's awful. It's just a non-stop signal. Your non-stop long-short signals. And it gets embedded massively on low time frames. This thing just gets hideous. I mean, it's just, look how many signals you get on the 5-minute chart. Today, on the 5-minute chart, it's signaled once, twice, 3, 4, 5, 6, 7, 8, 9, 10, 20 times. 20 signals in one session. Just awful. Far too fast. You can slow it down, obviously. I don't know what you slow it down to, really, but it's terrible, which is why I use the RSI, because the RSI is based on strength. Stochastic's based on price movement. I can see price movement because the candlesticks paint that on the chart. I can't see strength of movement, which is what the RSI helps with. Do you need to make any adjustments to the EA if you are on a spread betting account? Henry, you've asked that question already. I've answered that question. No. I'm having a deja vu moment. I think I'm entering the Matrix. That's not the Matrix, that's John Wick, but it's the same bloke. The EA works on ADR, doesn't it? Well, it depends. If you're using the EA on ADR settings, no. If you're using the EA not on ADR settings, i.e. you're using fixed pip stops, then yes, you will have to. Because obviously every instrument has a different pip value, which is why I use ADR, because ADR is dynamic. It changes as the market changes, market conditions change, and every measurement is unique to each instrument. So I don't have to muck about with targeting, stops, drawdown control, anything. It does it all automatically on ADR. I would use ADR if you can, because it's better. But obviously make sure you've got the spread filter turned off, because if you're on a spread betting account, you're going to have big spreads. Dow, still not gone anywhere. We're still inside the opening range. Zero movement today. Nasdaq's pushing long. Nasdaq's an absolute mess as well today. Looks like he wants to go long, but can't quite get the steam at the moment. These huge wicks, the upside today. Oil, 66 people in here. No one's asked for it yet. Oil, that is starting to push down. We've got very nice wicks to the upside. London put in a new low. All we did, though, was tap into the low from Friday and reject. So at the moment, oil hasn't got any directional bias at all. However, we haven't taken off. So we're on day 3 now, sideways. And looking potentially like we might want to come back down and retest these lows. We can't seem to get any traction to the upside. So this push that we had, this breakout, failed. And the market hasn't managed to rally off the back of that breakout. So if it's not going to break out, it's certainly not flagging. It's just gone into another accumulation. So at the moment, it looks like it wants to drop back down to the downside and get these gap fills done. And if it's going to do that, that gap fill is in play, which is a beautiful trade. I said this morning, if we break this low from yesterday, that's a lovely pending short. And yesterday's high is a lovely pending long. Because when we break out of either yesterday's high or low, there's a good chance that we're going to make a run either for those propulsion gaps or the gap fill. Or if we break that high, we're going to run on that high. And if the limit orders don't trigger there, we're going to go. We're going to go off to $95 a barrel. So there's really good opportunities for short and long trades off of this oil at the moment. So interesting. JC, I'll buy it gold. Steve, you're too late. Someone's already asked for gold. We'll have a look at gold in a sec. Using the standard mean reversion settings, and they aren't triggering. Don't know. Make sure if you're an MT4, obviously make sure you've got auto trading turned on. Let's see. So make sure auto trading is turned on. And make sure you've got the smiley face up in the top right hand corner. Yeah. So you need the smiley face and auto trading. Other than that, it's all down to the filters. So if you're using mean reversion, the only filters in play, if you're assuming you're using the ADR mode as your stop loss, make sure your maximum stop loss allowed is within your broker. Your broker may have a completely different digit count, yeah, and 9,999 on your broker is 99 pips, for example. You could have an ADR stop loss placement, which is too close. I mean, you stick it in the back tester, in the strategy tester. Literally, it's just using a higher time frame RSI. That is the only thing it's testing. And make sure your spread filter is turned off. That's the only thing. So whenever someone says it's not triggering, it's either you've got auto trading turned off, you've got an unhappy face there, because in the actual EA settings, you've got allow live trading unticked. Gold. Coming down. So US dollar strong. These propulsion gaps are in play at the moment. We filled that very, very quickly the week before last. We've just filled that one on Friday. These are the targets to the downside at the moment. You've got an upside target there as well. So at the moment, assuming we get this continuation strength on the US dollar, we should get down to there probably tomorrow, the day after. Once that's complete, potentially we'll get some weakness on the US dollar and pop back up to the upside. We could, however, right now, take out yesterday's low, come up, fill that gap, and then come down and do these afterwards. All depends on what happens with this US. We've just had strong movement on the US dollar, strong news rather. So that's obviously driving it down at the moment because we've got a big US dollar movement. Upcoming news on the US dollar. We've got tomorrow the Canadian CPI. So if the Canadian CPI is positive, that will rally the CAD, which will also drag the US dollar along with it. And then we've got unemployment claims on Thursday. So based on what happens tomorrow with the Canadian dollar, we will get strength or weakness in the US dollar. And then unemployment claims on Thursday will drive the US as well. So obviously this is just a US dollar cross. So what happens to the US dollar happens to the opposite on gold. So at the minute, we've got a strong US based off of Friday's movement, and that is continuing very nicely. So I would say looking at 175 to 150 ADR to the downside. When that's completed, see where the gaps are to the upside and then pull back into those gaps. There's gold. Done it. What does the smiley face mean? The smiley face means that your EA can trade. If it's not on, you can't trade. That means basically it's trading. If you're new to MT4, Henry, or MT5, you need to just go and learn about the software a little bit, really. Just Google or go through the manual on MT4 on their website. But EA smiley face. So basically, if you have under the common tab in the inputs, if you have allow live trading turned off, that will become a sad face, meaning I can't trade. That means you can trade. So if you've got auto trading turned on, that should be a smiley face. If that's not a smiley face for any reason, that's that'll be why it won't trade. I washed a new set of towels. I'm good to go. Excellent, Brian. There you go. There's gold. Down at the moment. I'm so tempted to take this. I might do this actually on my EA account. Where's oil? I'll do it in a minute. I've just realized I haven't got a lot size calculator on this MT4, so I need to put that on as well. Afternoon, Tarmo. How goes it? Binance. What Binance getting in touch with me for? So wicks to the upside again. Still can't make any progress on this Dow at the moment. So I'm long at the minute, but not actually getting anywhere. Can't get a break today. Nasdaq's completely stuck as well. Rubbish. Huang, PC is a bit slow, or is it a MT4 thing? No, MT4 is not really slow. Maybe your PC? I don't know. Steve, remember I had issues with EA not trading for me. I think it was because I had too many indicators on each chart that the EA was running on. Over the weekend, I stripped them all back, and it's now okay. Well, yeah, you could. I mean, if you're, you could be overloading your machine. Yeah. So basically, what happens with the EAs? It's obviously if you have multiple pairs on an MT4 terminal, and you've got like 28 charts open, for example, and you've got the same EA running on all 28 charts, and it's told to do something every time there is a candle close, like the market reverse alerts EA is, every 5 minutes, it's running multiple calculations on every single instrument at the same time. If you've got 4 MT4 terminals all running on the same machine, all running 28 pairs, all doing the same thing, every 5 minutes, the load on that machine goes through the roof, and then it drops down to virtually nothing. Then it shoots through the roof down to nothing. So if you've got an EA running that is told to execute a trade, and basically the terminal hangs, that trade may not get executed, in which case you need a more powerful machine. It's like any piece of software. Windows is absolutely fantastic. If you run 25 MT4 terminals on it, Windows will crash. So you've just got to make sure that is not an issue. And obviously, if you have lots of indicators running on a terminal as well, they all have load. So mine is getting a little bit sluggish when I'm flicking between things at the minute. So it's getting a little bit laggy at times. How much did I spend on my PC? Well, my PC doesn't have any problems. My PC is fine. I don't know, a couple of grand to £2,000, £2,500. It's a high-end gaming machine. So lots. But VPS, if you're running EAs, you should be running EAs on VPSs. VPS, my VPSs range from VPSs or dedicated servers. I've got dedicated servers and VPSs ranging from sort of $30 a month up to $120 a month. I think it's the most expensive dedicated I've got. But the more you chuck at it, the better it'll be. Nasdaq's trying to break the downside again. Dow is rejecting the upside again. So if you want to take a quick long, hit the buy button now, put a stop loss under there. You've got just as much chance of it going up and down as anything else at the minute. Utter mess today. Look at the wicks on this. Look at the wicks on this. Just terrible. Look at it. We definitely are rejecting those highs. However, the sellers cannot break down either. So there's a lot of selling pressure, not enough buying pressure at the minute. So it almost feels like it wants to give up the ghost and break to the downside. Nasdaq is certainly trying very hard down here, but the moment, no one's winning anything, are they? So it is a long though at the minute. Opening range high is broken to the upside. So there's more buying momentum than there is selling. So at the moment, it's a long. It's a really, really sketchy one. So anybody got any other pairs they want to have a look at? Because I've covered everything that's extended on RSIs. There's no more ADRs today. ADRs are flat. Anybody got anything else they want to discuss? Anything they want to look at? While I'm building this additional indicator for support resistance analysis, and obviously incorporating all the other bits and pieces into it, is there anything anybody thinks that they might want? Also, market is barcoding. It certainly is. Christmas treeing, I call it. Well, not on this chart because this is green and black, but on a normal chart, red, green, red, green. It's Christmas. Have you done Aussie US? No. I don't think so. No. So Aussie US is just sideways at the minute. Obviously, we've got US dollar strength. Therefore, it's coming down. It is bearish overall. Got longs on this at the moment. Well, a long on this at the moment, which is off of the RSI extension on the 1 hour chart from Friday. So looking just to come back up into this propulsion gap. At the moment, we're just retesting this area, but that is kind of filled. So it's just about extended. So we're looking for a push back up into there. However, it might come down and do that ADR first and then push back up. I'll be waiting for some kind of push back up into that area. But at the moment, the US dollar is strong. So we could collapse. That's your support down there. And then obviously next level of support is down there. One of them. David, I don't like this pair, but looking at Euro Pound, already long on Euro Pound, I think. No, I'm short Euro Pound. Still short Euro Pound. It's using my my break even as support. Look at the moment, ADR. Euro US dollar ADR, very good, strong US dollar at the moment. So yeah, nice long opportunity. We're not quite there on the hourly. That would be absolutely ideal. If we can push down to 125 ADR on that today, that would be absolutely brilliant for a long. Back up into there. I'd class that as filled. That's tested. So that would be a beautiful long. Failing that, there, back up into there. Or it might just go from here. I'm short on it at the moment. Wish I wasn't, to be honest. What's the bias on it? It is a long. Cut long. Retail are all short at the moment. Retail are all short at the moment. They're doing well today, look. Nuno, on the support resistance, it's possible to choose which time frame we want to see. What on this? You can, well, no, support resistance is support resistance. Time frame doesn't have anything to do with support and resistance, really. So this shows you weekly and monthly and daily as well. So on the lower time frames, you've got these levels here are your daily levels, the little red lines. The blue lines are weekly levels, and the darker color, which isn't turned on, the darker colors are the monthlies. I mean, I could put hourly, support resistance, 4-hourly support resistance. But I mean, that would be if you're going to be trading small time frames. Don't forget, I'm building this for me, the way that I teach position trading. Yeah, I don't touch anything less than hourly and 4-hourly. So I'm only interested in weeklies and monthlies. I'm not interested in intraday support resistance. If you want intraday support resistance, there's plenty of indicators out there that will draw it in for you, I guess, but it's not what I do. I mean, I could build in other time frames, I guess, but where do you stop? All this is doing is plotting back previous support resistance from the previous weeks. And I might actually put an algorithm in to tidy it up as well. Although I do actually quite like seeing the previous levels. It's too aggressive, isn't it? Let's turn it down. Let's turn down the wick on it. Oops. Make it a little bit less aggressive. So so I quite like seeing the previous levels. So, you know, we're dropping out the lows here on the New Zealand dollar, US dollar. Right. So where are we headed? Yeah, down to that weekly level. And then we got this previous monthly, that previous monthly. So somewhere down there. So if you're trading weekly support resistance, you'll be trading on the hourly chart usually, or you could trade on M15 if you wanted to. But the weekly levels are still going to be relevant. If you look at the daily levels, if you use daily levels of support resistance, you just end up getting tons and tons and tons and tons of lines all over the place. The weekly ones are the most important ones. Those are the levels the market respects the most. Those are the bigger institutional levels. So those are the ones you really should be aiming for and looking for where we're likely to bounce from or where we're likely to head to, obviously. So when you break out of a level, like we have here, we've broken out of this low. This is either going to hold, this one that we're at the moment, yeah, or that one is going to hold. So we've just popped our head down below there. If we get enough limits trigger here, we'll pop up. If not, we'll head down to here. But there's no other zones kind of in between that, really. So that's all really you should be interested in, weeklies and monthlies. But I could do dailies, I suppose. I wouldn't use them. But why am I suddenly getting attacked by Binance? Is anybody else on Binance? They've been text messaging all day or WhatsApping, basically. Somehow I've been added to a Binance group. Some kind of scam. I'm just going to report it. Twice now in the last week I've been added to some WhatsApp scam. Scammers, be careful. I know all about scammers. I have got a Binance account. I don't use it though. So if I missed it, did you see my query above? Any major issue on the Dow set file if I want to use it on a different index? Example, Egypt. No idea on that one. I guess you could use it on any index as long as it's got an opening time. I don't know what time the Egypt index opens. Has Egypt even got a stock index? Has it got a stock market? I don't know, Mimo. Test it. I wouldn't. I wouldn't know. Whipping post. May your deity forbid, but do you have a contingency plan in place for your trades should anything happen to you? No. Like what? Does anybody have a contingency plan in place if anything happens to me? I've got a will. I should put a line in my will. Please make sure you log into my VPS and turn off the EAs. No, I haven't. No. I guess the account would either be run down to zero at some point, or it would just carry on making money. I've no idea. Never been asked that question before. No, I don't. Afternoon, Neo. How you doing? I trade Bitcoin on Binance, and I keep getting spammed since yesterday. So there's obviously some. They've got hold of our details somehow, haven't they? Fletch, you just deleted the group as well. Yeah. So everybody's obviously been. Binance have leaked our details by the sounds of things. I have a contingency plan in case I get shot. I think that's death, isn't it, Tamo? What's your contingency? I'm interested. Have you found the eternal holy grail? Mumo, thanks. I'll test. By the way, where's the settings on WhatsApp that prevents anyone from adding you to a group? I don't know. Oh, there is a setting on WhatsApp. Oh, is there? That prevents you from being added to a group. Yeah, but I don't want that because I do get added to groups every now and again by friends and stuff. On ADR strategy, we could go to 1 minute to get the reversal. You could do. The only problem with 1 minute, if you look at the ADRs we've had today, so we've just had 2 more ADRs hit today. We've had the Euro US dollar, which has just hit ADR. So if you drop down onto the 1 minute chart, because you are just trading algorithmic chop, you will find that you will get triggered in and it will do that. Yeah. So yes, you will get a tighter entry on 1 minute than you will on M5. So M5 entry would be somewhere around 9296. M1 will be 9239. But M1 is just chop. So up to you if you want to trade M1. I just don't trade M1. Perhaps he sells you one, a plan. Yeah. What's my contingencies in case I get shot? I'm not likely to get shot in the UK because we don't have guns. We're not that silly. Well, we do, but you'll find it very hard to get hold of one. Not like in the US where you can just go into a shop and go, "Can I have a gun, please?" Yeah, brilliant, thanks. Can you show GU? There you go. There's GU. What do you want to know about it? So basically, GU looks like we're coming down to propulsion gap fill here. That was retested. We got this one here, so a nice accumulation break there. So 150 ADR would be target on this. You are just coming down to 100 ADR, which potentially will get a bounce off of that support as well. So again, looking at GU. Yeah, so GU, there's your support resistance. So again, this line here is the 4-week high. 4 weeks ago, that was the high of the week. We pushed into it again, broke it, resistance, broke it, slammed through it, tapped it. Yeah, so this is one of the reasons I want to keep these old lines in place, because this 4-week high here acted as a resistance and then turned into support. So having this line in here when we're on our way down tells us a previous area that was reactive. That's where I would be looking for a potential bounce. Also happens to be a propulsion gap. And again, you will find often propulsion gaps form around support resistance lines. Why? Because when you get to a support resistance line, to break it, you need a lot of sellers to get through a support or a lot of buyers to get through a resistance. So because we hit this level and we need a lot of buying pressure, you tend to get a strong move through the level. So you find propulsion gaps around support resistance zones because there is a lot of buying and selling activity at those levels. So this is why it's a good idea to keep that in place. Look, resistance, resistance. When we came back through it, we pushed hard through it, made a propulsion gap, which then retested. So that is a good level, pound US dollar at ADR. So that'll be a nice spot for a bounce, push back up into that propulsion gap, which just happens to be a monthly resistance. This level here, this big, strong, thick purple one, that is 3 months ago. That was the high. Yeah. So potentially that could act, as it did there, could act as another rejection level. 1, 2, 3. Don't know, do we? But levels is what the market moves from and to. So the more you've got, the more confluence you're going to get on your charts. Lee, does the police have guns in the UK? No. They do. We've got SO, was it SO14 or SO15 in the UK? But they're a response unit. So police don't walk around with guns in the UK at all. Batons. Spray. Tasers. Got tasers, but no guns, no. That's why we don't have a gun problem in the UK. If the police don't carry guns, criminals don't need to carry guns. If criminals don't carry guns, no one gets shot. Really simple. This is what Piers Morgan's been going on about for many, many years. How do you solve the gun problem in the US? Get rid of the guns. Problem solved. That's what we do in the rest of the world. Thanks for the follow, Seeley. Welcome aboard. Daniel Costa, I missed you 7 hours ago. Sorry, if you're back in here, welcome aboard. I missed you 7 hours ago. That was in this morning's live stream. Bit of a delay. Timo, okay, not shot then, Lee. What if you walk on the streets and get stabbed 20 times? Again, I die. So there I haven't got a contingency plan. There is no contingency plan for death, Timo. Right? If you die, you die. So any direct debits going at your bank, they're still going to come out until your bank stops everything. You know, all that sort of stuff. So I have a piece of paper and a will, and I leave all my passwords and everything there for whoever needs it. And yeah, all my logins for my accounts will be there, and they need to go and stop my things. But I haven't actually put a specific go and do that. I have put a specific, this is where my money sits. So they know which brokers have got money sitting in them. No, I haven't got any contingency plan in place or anything like that. Gold hit last week's low. Whoa, what's going on there? There's a bug. Something weird just happened there, didn't it? Oh, that was because the platform froze. That's why I didn't get any ticks. That's not a bug. It's a platform. Yep. So there's last week's low. Just got tapped into at ADR. Yeah. Again, look at this level. Look. So this level on the chart here is 5 weeks ago. This was the high. So going back 5 weeks. Yeah. Here. That was your 5-week high. Price respected that, came back down from it, pushed up through it, respected it again, pushed down through it, respected it again, respected it again, pushed up through it, respected it again. Old resistance becomes support. I've only ever gone back 6 weeks or 6 months. That's all I'm basically doing. Support resistance. Anything older than that, put it in manually. It's really not that relevant a lot of the time. Just turn off the alerts on this. Yaman, stop making sense. What? No. Hang on a minute. Take the guns away and no one gets shot? I didn't know Piers Morgan is your role model. No, he's not a role model. He just talks sense. He's a very outspoken gun person, isn't he? That's all. He's not a role model, but he's he makes when you look at all the countries in the world that don't have problems with gun crime, the reason is because they don't have guns. It's very simple. Like, I can't go and buy a gun in a shop, therefore I can't go and buy a gun and shoot somebody. If I want to buy a gun, I can probably get hold of one on the dark web or from some drug dealer that I find hang on a street corner or something. I don't know. There is obviously ways to get hold of them. We do have gun crime in the UK, except we very rarely ever have it. It's very, very rare. So, we might get 5 shootings a year or something like that instead of 5 an hour, which is what happens in the US. Yes, the population is bigger, obviously. But, it's just one of those things, isn't it? It does make logical sense. But I understand the Fifth Amendment and all the, it's a constitutional right and all that. And that's fine as well, isn't it? But, in my state, I can leave right now and have 50 guns legally by the end of the day. Yeah, I know. This is the thing, isn't it? Second Amendment, is it? I don't know. I don't keep up with the amendments because I don't live there. But yeah, and that's the problem, isn't it? If you could walk out your house right now and go and buy 50 guns legally, there's a problem, isn't there? If you want to go and, how many mass shootings has there been in the last 2 weeks? I think there's been 3 or 4 school shootings, isn't there? That I've seen on the news in the UK. And it's like, surely if you take away the access, I don't know. It's not as simple as that, I know. I'm not going to get into a gun debate but I know it's not that simple, but for us mere mortals in the UK, it's very simple. We don't understand it because we don't have a problem with it. We don't have a problem with it because we can't get access to them. So it seems simple, I know, but it's not. We're just touching the lows. Still haven't broken out that low. That's a double stop out for me. So that's 2 stop outs on the opening range breakout today. Can't get a break. Obviously, that's why I've been stopped out twice, because we can't get a break. So yeah, stuck. This low is obviously a good looking spot for a buy. I would imagine the Nasdaq's broken out the lows now. So the Nasdaq's out the lows. But again, really struggling to find any movement. It's erratic as you like today, isn't it? Totally erratic. David, it's too late to solve the gun problem here in the US. Everybody already owns one. I know, yeah, that's what I mean. It's not a simple problem, is it? It's not a simple. There's no simple solution to it, at all. Because it's like in the UK saying to us, take away cars. It's like that. We can't take away cars because we've all got them. You can't suddenly fix a problem like that. I have one, but never used it. Yeah. I have it just in case someone messes with my mum or tries to break into my house. Exactly. This is the thing, isn't it? It's like everybody's got a gun in case someone breaks in with a gun. If you take away the gun, the person breaking in wouldn't need the gun. Therefore, you don't need the gun to combat the guy that was going to break in with the gun. And if neither of you got the guns, then we just resolve back to knife crime. And knife crime quite often isn't fatal, but it is debilitating. So if you go in with a knife and you stab someone, they're going to go on the floor and bleed. They can't do anything about it, but they might well live. Quite often do. So it's a non-fatal way of robbing someone. Don't know. Just makes logical sense to us here to do that. That's why all the kids around running around with knives. Anyway, as I said earlier, if we invent the replicator, no one will need to rob anybody because everybody will have everything they need because they just replicate it. Therefore, there isn't a problem of crime because you don't need anything because you just make it. Someone needs to invent the replicator. There you go. I have just fixed the world as long as someone can invent that technology. So we need OpenAI basically to create a replicator. If they can create a replicator, that will remove the gun problem. If we remove the gun problem, everybody then becomes rich. Therefore, we don't need to trade anymore. So what would I do? Go and live on a desert island drinking Mai Tais, I guess, which I've replicated through my self-replicating machine. There we go. You can tell there's nothing going on with the indices, can't you? Because I'm talking utter rubbish today. So buying the lows, selling the highs at the minute. The Dow is just stuck sideways, not going anywhere. William Sadler is incognito trading with us. Who's William Sadler? I don't even know who that is. William Sadler, he's from, what's it called? Roswell. An American actor. Very precious about not amending the amendments. Yeah, I mean, and that's no, I don't have a problem with it. I don't live in America. So I can't comment on it really because everybody's got a different opinion on it. But obviously the problem we don't have here is gun crime, and it's this is why Piers Morgan goes on these rants and starts arguing with everybody in America, because it's very easy to try and solve someone else's problem when you don't have that problem. But what Piers doesn't realize is it's a big country with a big problem caused a long time ago that isn't got a push button solution, is it? Everybody's got a right to do something. It's like, if they suddenly took away our rights in the UK to do something, there would be uproar. Same as in the French. Look, they're just trying to make the French retire 2 years later. They're rioting in the streets. Again, not shooting each other because they don't have guns. Anyway. But if everyone is rich, no one is. I know Forex pips, and this is the problem. This is a problem with replicators. But is it a problem? If everybody's rich, no one is poor. As long as you can afford a replicator, and this is where the crux comes into it. If replicators are invented and they cost $1.5 million, only the rich are going to have replicators, but they're already rich. So someone's got to invent the replicator that nobody needs to buy, and it's given to every human being on the planet. Then everybody becomes equal because you don't need to work. And what you would do is you would go to work, wouldn't you? But you go to work doing something you love, like flying a starship. I'm not a Star Trek fan, obviously, as you can tell. You might think this is funny. I bought several guns as an investment intending to sell, thinking they would stricken law, but they loosened them and the guns dropped $200. Supply and demand. Serious question about trading. From your experience and knowledge, do you foresee a future in which currency that we trade will no longer be in cycle, instead of worldwide crypto or something? I've no idea. I doubt in my time, because I don't think you'll get to that point. As long as there is people that need something and people that sell something, there will be a supply and demand. As long as there's supply and demand, there's a market. So as long as there is somebody wanting to invest in stocks and somebody wanting to sell stocks, the stock prices will move up and down. As long as there is an economy, there will be a US dollar and a pound. Yeah, as long as people are wanting to move money between these two places for commerce or leisure, there will be an exchange rate, and that will move up and down. I can't see us getting rid of currency until there is an equilibrium, because everybody's got a different economy. So what happens if we scrap currency and go with a worldwide crypto? All of a sudden, everybody in South Africa becomes as rich as everybody in Brazil, the US, Australia, America. Doesn't happen, does it? It can't happen. I don't know how. And if it does happen, it's going to be a long process to get to something like that. Just don't think it will. Replicator, you mean a 3D printer? Yes, I do, Virginia, mean a 3D printer, but a 3D printer can't print money or food yet. When it can print money and food and every item I ever need, then yes. So, for example, my monitor blows. I need a new monitor. I need to be able to replicate that monitor within 10 or 20 minutes. Until that scenario is there, where I can have something the same day as I need it, that is highly technical, like a television monitor or a computer monitor or something like that, then that is when we will get to the point where nobody needs anything, does it? So I really fancy the new iPhone, print one. But then economy collapses, doesn't it? There is no business. There is no commerce. I don't know. We're getting a bit deep, aren't we? This is a very difficult conversation. He played to death on Bill and Ted. He did as well, Brian. You're right. Yeah, William Sadler. I remember him from Roswell. So there's a TV program called Roswell, which I used to love as a kid. And William Sadler played the cop in Roswell. Somewhere. Main cast. There you go. William Sadler, Sheriff Jim Valenti. Good TV show, that. Very old, though. Oh, when was that? 2001. There they are, look. Oh, you can see that. Or that. There he is, look, little William Sadler. Euro US dollar, buy on ADR and H1 RSI. Yeah. It's a good buy at the moment. Wait for a reversal alert on it. Look at the state of this thing. We're waiting for something, aren't we? We are waiting for something to happen. Not quite sure what we're waiting for. Lagarde speaking now. Market's just not moving, is it? Okay. Pound yen. Yeah, I've covered pound yen. We're waiting for pound yen to do something. Ideally short. I'm short at the moment. Looking for propulsion gap targets to the downside. Just waiting. Waiting. US dollar yen, same thing. Waiting for US dollar to weaken and yen to strengthen up. We've got propulsion gap targets to the upside we're heading for at the moment. This one's just getting filled. We got 150 ADR to complete that, which is going to run. We're running into resistance, potential resistance now to come down into these areas. We need the yen to strengthen up though before we get back down there. So, but it's good looking short. Hourly RSI extension, 4 hour. We're getting there. So if we continue up today and we hit ADR and get this propulsion gap done either today or tomorrow, that'll be a short back down into there. I'm already short one from wherever it was yesterday, Friday. Yeah. So I'm short on this yesterday. So that was an ADR hit on yesterday. And obviously H1 RSI extension. So I'm in short there. Resistance didn't hold. Propulsion gap's getting filled. So we'll be taking a second one, looking to come back down and get out here at some point. Look at this. Wicks. I haven't seen it like this for a while. This is probably the nastiest day I've seen. However, from the opening range breakout EA perspective, this isn't actually that nasty. All it is a breakout long, stop out, breakout long, stop out. So it's two kind of 50% stop outs, but there's no breakout to the downside whatsoever, and we haven't rebroken the up. Oh, yes, we have. We've just broken the up again. Oh, yeah, I'm long again. Just got long again on that wick as well. So 3 longs, but literally not going anywhere. Awful. The other day on Trading Nut was a guy that reminded me of you because he was a coder and backtested his strategy showing his equity curve. What he does is trade a breakout strategy on the daily. There's a lot of people that do that. Larry Williams was the first originator of that. Oil, already looked at oil. 2 plays on oil at the moment, long and short. So break. Right, yesterday's low is just broken. Okay, so short here. Retest that level. Potentially gap fill. Or break of the high. For a long up to $95 a barrel. So So that short got rejected. Look, the support rectangle held. Got these lovely downside targets as well. Look, I really fancy the short, but difficult. 15-minute reversal alert happened this morning in London. So we're definitely bearish market structure. But not going anywhere. He takes the breakout of the last 20 bars. Was that Jared? The transparent trader? Bald guy. He also has a daily strategy in which if the daily bar closes below or higher than the previous high or low, he places an order in the opposite end. Indices gone nowhere, correct? Yep, he took courses from Larry Williams. You're so smartly, I know. Probably Jared you're talking about. Transparent trader. He's a big Larry Williams student. Quite rightly so. Because he's got very good strategies, and I use one of them on the S&P 500 when it's trending, which it isn't at the moment. Which I'm hoping it's going to do soon. So what this is, I'm smarter than I look. I thought I looked pretty smart. I have got glasses as well, so if you want me to put those on, I can look even smarter. One of the Larry Williams' famous strategies is called the smash bar, and that is basically the strategy that I play on the S&P 500, smash bars, long. But it only works in a bull market. It doesn't work in a bear market, and we're in a bear volatile market at the moment, so it's not actually working at the minute. It's been turned off since Christmas. I haven't traded it this year. I didn't trade it at all last year either. So I'm waiting for us to get back into a bull market, which is starting to look like it might be happening. Although it's so unbelievably weak at the moment. But anyway, yes, it was him. There you go. US dollar Swiss, long at the moment, out of support. So US dollar Swiss basically got out of my longs on Friday. We're pushing up into this propulsion gap. We've got that one up there as well at 175. US dollar is obviously very strong. It's been stuck against the Swiss franc. The Swiss franc is now starting to weaken. The US is starting to strengthen up. We're extended. So you could look for shorts in here, pull it back down into there, then potentially up to there, then wherever. Don't know. But right now, it's extended to the upside. So I'd start to be looking for short opportunities to pull back down either into that gap or back down into there. So drop down onto M5. Wait for a reversal alert. So that one there to go short, back down into here, but all the way back down into ADR 125 eventually. But there's too many targets to the upside at the moment on this one. So there and there are the obvious spots for a continuation short. So this propulsion gap here, when we get to there, short, or from here, short. There you go, US dollar Swiss. What coding did you do in your real job? As opposed to this video game you play? HTML, CSS, and PHP. I was a web coder. You play Smash Brothers? No. No, Smash Bar, I said to Tamo, not Smash Brothers. Smash Bar strategy. If you Google it, there he is. There's Jared, look. There you go. That's the guy I was talking about, the transparent trader. Larry Williams smash day. Oh, look, there you go. There's Stat Oasis as well. There he is. But basically, all a smash day is you make a new low, you put a pending order above the high, you take the breakout. Very, 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 very simple strategy. It only works before you ask. On the daily time frame, it does not work on the 4 hour. It does not work on the hour. It does not work on any other time frame. I have tested it. I have an EA. I have built an EA to do the smash bar. There it is, smash day. There's the EA. I've already got an EA that does it. I've back tested it to death. It's a good strategy, but daily. It's an investment. Larry Williams, all the best traders in the world are day traders, not day traders, rather. They are long-term traders. They trade the 4 hour, the daily, and upwards from there. Because on every time frame below the 4 hour and the daily, you're trading chop. Yeah, so this is all chop. Up, down, up, down, up, down, all over the place. Everything gets smoothed out on the 4 hour and the daily. Larry Williams only traded the daily. The turtle traders only traded the daily. All good investment traders only trade the daily because the trading the daily reduces risk and it slows the market down to a pace where it's very difficult not to make money. However, you need a massive bucket of money. Larry Williams's book, Long-Term Secrets to Short-Term Trading, explains exactly how to make money out of short-term trading, and it tells you not to do short-term trading. It doesn't work. It doesn't work with a stop loss, put it that way. Does it? We know that. It can work for periods of time, and you will find lots of strategies that do work on hourly. But as soon as you go down to M15, M5, M1, anywhere down there, there is no one on the planet making money out of it, apart from super, super skilled short-term scalpers who have the discipline to get in and out the market once or twice a day, waiting for that perfect opportunity. And they are, count them on one hand. They don't exist. Hourly timeframes and above is what any good trader will be looking at that's consistently profitable. Because and this is all based on Larry Williams analysis. You can't make money on the short-term timeframes because they're just chop. It's random. So even on our hourly, when we're entering on the hourly time frame, it's always going to go one way or the other, isn't it? But that's the same on all time frames. But on the hourly, it can do that before it goes anywhere, and it can do that for 1, 2, 3, 4 days on the trot. Yeah, if you enter on the daily time frame with that smash day there, you entered long there, you would have been waiting for that smash day entry there, which is just triggered, to get back into your second entry to exit there. And again, Larry Williams uses an exit strategy called FPC, first profitable close. And the first profitable close exit means that you get out when the trade is in profit. You don't get out because the trade's gone against you. You get out when the trade comes into profit, because most long-term investment traders do not worry about going into drawdown. They position trade. Yeah. So if you get into a trade on the S&P, when you can see it's actually trending. So you get into a trade on the S&P on a smash bar. So that would have been a smash bar entry there. You would get out there. You would get in on a smash bar entry there. It went against you. You'd have got in with another one there, and you got out there. You'd have got in there. You'd have got in there. You'd have got out there. Don't get out just because it's coming down. You get out when it makes you a profit. And this time frame is perfect for doing that. But again, Larry Williams didn't trade anything but stocks and commodities because they're predictable. But we all want to trade M5 because we all want to be millionaires and drive Lambos. Like that one. But in the real world, God, the adverts I've had on YouTube this weekend for people selling Lambo courses. There seems to be I don't know whether it's because I keep mentioning the word Lambo in here. All the adverts I keep getting are guys with new courses like this bloke. He might actually know. I'm not sure he's one of the Lambo gang, but there's so many guys coming up with these ads, and they all got Lambos. There's a guy the other day, over the weekend, he had a jet, and then he was standing in front of a green Lamborghini. He unveiled it. Someone pulled a cover off this green Lamborghini. Like, that's not your Lamborghini. And he was selling a course for $2,000, and he said he only trades for 15 minutes a day. Well, good for you. But you don't have a Lamborghini or a private jet through trading 15 minutes a day. You do it through selling a course for $2,000 to 20 people a month. Anywho, you know my feelings on that. I ordered a market structure trading t-shirt over the weekend, David. You didn't. Did you? I haven't seen that order. I don't get the orders, actually, so I wouldn't know if you had or not. Been thinking about an Asian range EA for FX. Problem that I see is price likes to sweep both sides before establishing direction. Yeah, Asian range EA is called the London Breakout strategy. So that's not the right thing to do it on. So London Breakout strategy basically works off of the Asian range. So you would have gone long there, and you'd have been stopped out, and you'd have gone short there, and you'd have made a profit. So you can use the opening range breakout EA to do this. Yeah. So if you just get the ORB EA, yeah, and you set your start time on range 1 to 0, 0 or 0, 1, or whatever your broker's candle is, whichever candle that is for your broker, whatever the time is there, that is what you set there. At the end of the Asian range, you set range 1 end, yeah, and then the EA will place the pending order at the high and the low, exactly the same as it does with the opening range breakout strategy on the indices. So you can use the ORB EA to do the London breakout strategy, which is the Asian range break. Yeah, and then you can set your stops, your TPs, and everything exactly the same as you normally would, and either trade it on the 5-minute or the 15-minute time frame. You could trade it on the hourly as well, but obviously the problem with the hourly time frame is you'll get a big candle like that, which could be, a big candle like that, and you've missed kind of half the move. So probably 15-minute. Most people that trade the London breakout strategy trade it on the 15-minute or the 5-minute. But the opening range breakout EA will do that. I've never made it profitable, but I haven't used the ORB EA to test the London breakout strategy though. So test it, try it. Question. My wish would be one day to be able to create a business where I can educate traders and eventually have them trade with me using my money. When that day comes, would you mind if I used your indicators, EAs, etc.? Oh, you can do, as long as they buy my stuff. I don't care. I'm hoping to build up my little portfolio of indicators and EAs to be a little retirement pot for me. Yeah. But I would, if you're using my indicators and EAs to teach people how to trade, it's all for free on my channel anyway. So you can't really charge people for it because it's all out there for free. Unless you do it differently, but is your smash bar EA for sale? No. I could make it for sale. Basically, this trades a lot of Larry Williams' strategies, and this trades a lot of what Jared teaches on his YouTube channel. but I mean, the reason I've never bothered to, I've got. I mean, you can see from the list here, I have got a lot of EAs I've built. This is not even touching the surface of the amount of EAs that I've built. I build EAs to test strategies, and because obviously backtesting is hard work manually, so I build EAs basically to do all the legwork for me. But the most profitable strategies I've got run on the daily charts, and nobody's interested in buying them because nobody wants to trade daily charts because they won't make money fast enough. If you've got a 100 grand account trading daily charts, you can make good 3 to 5% a month. Fairly risk-free, but you would only take 3 or 4, maybe 5 trades. So no one's interested in that. Everyone's interested in EAs that make you a fortune very, very quickly. Yeah, if I tried to put an EA up for sale that took 24 trades a year on an instrument, no one would be interested because you just wouldn't be interested. It's just, people just don't want that, do they? But I could do. I haven't, to be honest, it's not something I use at the moment because the market's not there at the minute. It's designed for indices. It's not designed for Forex. Again, I haven't tested it on Forex. I suppose we could test it on Forex. I'd have to set it up because it doesn't use ADR. So I'd need to set the stop levels. I don't even know what it would do, to be honest. No idea how this is set up. It probably won't even take any trades. And as you can see, it's not optimized either. It's incredibly slow. This is far too tight. This is not set up properly at all. Anyway, I can look into it if you're interested in it. I'll need to optimize it, and I'll need to not optimize it. I need to optimize it coding wise to make sure that it runs at a decent speed. The stuff I built for myself, I'm not interested in necessarily speed, so I'll need to test that. But how would you feel if someone started a YouTube channel using your indicators and EAs? They can do what they like. As long as they're mine, they're copyrighted me. As long as they haven't ripped them off, then obviously they'll get sued. But if someone wants to use a YouTube channel and recommend my products, then that's fine. If they are blatantly ripping off my products, I have all the evidence I need that I came up with them first, and I will just get them shut down. In the same way as everybody else does on YouTube, it's all plagiarism and ripping everybody off, isn't it? I didn't come up with anything that everything I've built is mine. I built it from scratch. Everything I teach is not mine. I didn't invent the average daily range. The ATR indicator was created by someone else. Market structure has been around since the market's been around. Wide range bars were created by a guy called M.A. Perry. They're not mine. Support and resistance is support and resistance. Nothing I teach is new. Everything is, stuff that works in trading. But the indicators and the products that I've created are copyrighted mine. So if someone had something that traded exactly the same way as the market reversal alerts indicator out there, then yeah, I would be after them because it's mine. I built it. The logic behind it, nobody knows because only I know it. So it'd be very difficult for someone to recreate that with the exact logic. There's lots of ways you can get market structure or market reversal indicators. For example, if you put a moving average, I'm going to give you all a really good idea here. Look, if you put a moving average on your chart, look, the 9MA, and look at when a reversal of that happens, and look at when the price closes below the 9MA. Very similar, isn't it? Just trying to find another example. Probably not the 9. But you had an entry there on the 9MA. You'd have got stopped out on it, but you had another entry there on the 9MA cross. You had another entry there on mine. You had an entry there on the 9MA cross. Lots of entries. So, the 9MA is probably a bit too fast. But at the end of the day, all this indicator does is it signals a shift in structure. I've just created an algorithm that doesn't draw the structure in all the time, constantly. That's the difference between what I've done. And nobody knows how this works, logic-wise. But a very clever person possibly could work it out. But anyway. I just don't know how to properly swing trade yet, Brian. I don't know what I was talking about then when you're talking about that. I'm profitable following your day trade examples. The daily chart would be like passive income trades. Yeah. Daily. I trade intraday, obviously, but the reason I make money and people make money trading the way that I trade is because they're trading the way that I trade, which is without a clue. If you think about it, yeah. The reason the way that I trade works is because I don't know where the market's going. So I'm not profitable, and people that trade this way aren't profitable because they've got some weird edge over the market that no one else has. It's not a secret sauce. The secret sauce is the same as Larry Williams' book. The long-term secret to short-term trading is don't do short-term trading. My secret to trading is you don't know which way the market's going. So stop trying to guess and just get in and wait. Because as long as it does that, you'll be able to get out. You just don't know when it's going to get in your favor. So we're not making money intraday on these lower time frames because we're clever or we have some secret source. We're making money because we understand that I have no clue when this thing's coming down. I know where it's going because I can see historically that's what it always does. Support and resistance works. Propulsion gaps work. When's it coming here? No idea. So that's my edge. The fact that I've given up trying to find the Holy Grail. It's as simple as that. It's this book, this 5 steps to becoming consistently profitable. Yeah. When I got my step 3, my eureka moment wasn't finding the perfect system or strategy. My eureka moment was finding that the system or strategy that is perfect doesn't exist. All of a sudden, then I became profitable. So it's not, the daily time frame. If you want to use a stop-based strategy, the daily time frame has thousands of them. You pick any strategy out there that runs on any time frame below the hourly, and you take that strategy and you transpose it up onto the daily charts, the equity curve will suddenly go profitable. But no one's interested in doing it. I'm not interested in doing it either because it takes too long. I do it, but I do it on an account where I don't have to withdraw money and make a living from it, because you can't do that very successfully without a big pot of cash. If I had £1 million to trade with, I could trade on the daily chart quite happily and draw out 10 or 15 grand a month. Not a problem. I haven't got £1 million though. If you've got 30 grand to trade with, daily charts aren't going to be able to make you enough money to live on. If you've got funded accounts with prop, you could trade off the daily and live, but you're going to need to get a lot of those accounts over the line, but you won't be able to get them over the line with the daily strategies. There's always something in there. There's always something against us. Just wanted to make sure. I wouldn't dare claim your stuff. No, David, I should hope not. I would recommend all my followers. There's other people. There's people that have set up their own Telegram groups using what I do, position trading and the indicators and everything. And they set up these Telegram groups and they go off and do their own thing, which is, it's no problem. I don't have a problem with it. As long as they're not, ripping off the course and selling it, or ripping off the indicators and selling them, that's not a problem. Everyone can do what they like. Like I said, I've been taught all this stuff. I didn't create it. I've just, like it's all taught in the bootcamp. I've bundled all this lot together from everything I've learned over 15 years. ADR on oil. Oh, here we go. I've missed it. Right, so there's your breakout short that we're talking about. So it has gone short. So there's your propulsion gap fills happening to the downside. So watch 175 ADR for the bounce. So right now, it looks like we might be wanting the gap fill. So 175 ADR or gap fill are your downside targets. So if you wanted to get in short right now, you could easily get a 1-to-1 potentially if you wanted to use a stop, but it might come up and stop you out and then come down there. If you use a stop, that's probably what's going to happen. But yeah, so looking like it wants to go short, isn't it? There we go. That was the break we were looking at earlier. Oops. Do you ever have consecutive losing months? No, I don't think I have. I've had bad months followed by losing months and losing months followed by bad months, but I class a bad month as anything under 10%. So, yeah, but not consecutive losing months. No. You only really have a losing month when you get squeezed, and you'll find that a squeeze will very, very rarely last more than about 4 to 6 weeks. So by the time the squeeze is over, you're back to making profit again. So even in Ukraine, didn't have 2 losing months back to back in Ukraine either when the Ukraine war kicked off. Got squeezed badly there. Brian, you're primarily a Larry Williams type of trader. Not really, because Larry Williams, as I say, is day trading. He trades the daily chart rather. So I'm a Larry Williams style of trader in the fact that I don't use a stop loss. Larry Williams does have stop loss strategies as well, though. He has multiple exits. If you read his books, there's a lot of information in his books. And like everything, like every course, there's a lot of, if you do this, that will happen. If you do that, this will happen. There's a lot of woolliness, if you like. I'm very woolly with everything. I come in here and say this could go up or it could go down because that's basically what will happen. One of those two things. I don't know which way it was going. And Larry Williams identified that he couldn't identify which way the market was going either. But he developed strategies and risk portfolios to make sure that he had an edge. But his edge wasn't picking direction. His edge was getting in on conditions that he knew had an edge long term, like the opening range breakout strategy has horrible, horrible, horrible days like today. But after the days like today are gone, you get massive days where you make a lot of money. And Larry Williams was the same. His smash bar strategy works in a very similar way to that. There's only so many days the market can move down against you before it has to move the other way because stocks get cheap. So when stocks get cheap, and this is where you get the oversold and overbought terminology used in stock trading on things like the RSI. Larry Williams has got an RSI strategy. It's based on the 2 RSI and the 4 RSI. It's all the same stuff, but his edge was not knowing where it's going and developing a risk portfolio approach that would make him money, which is all I do. I don't know where it's going. No one knows where it's going, do we? Made a 1.8% loss today on the H1M5, as we did the day before, 1.53. And then what did we do the next day? 2.6. Why? Because we know the edge is there. The edge includes losing money, as all strategies do. There's no edge that makes money all the time. If it made money all the time, we'd all be millionaires. Then we wouldn't need those replicators, would we? What about linking a couple of prop accounts together with a VPS? Yeah. Yeah, all prop firms you can trade multiple. Prop firms really want you to use stop loss based strategies because they want you to have a good risk profile. You will get picked up by them. So when all these prop firms say we will fund you, they don't fund you in month one. They know that they've got an 85% dropout rate on funded accounts. So 85% of traders don't make it to payment. So they know that after you pass phase one, you go to phase two. After you pass phase two, you go to funded. When you get to funded, they know that there's an 85% failure rate. So they don't fund you with real money on month one. They monitor your account on month one, and you are still trading on a demo. Yeah, when you pass evaluations of my Forex funds and stuff, you're still on a demo account. You're funded, your class as a funded trader, but you're still trading demo. They're evaluating your activity that you're doing here based on what you did through the evaluation. If they see a steady risk profile that is not got a huge downside and has a nice equity curve, they will copy your trades over onto the funded accounts. But they want stop loss traders because not using a stop loss has too much risk. And I totally admit it does have too much risk. But if I had £1 million to trade with, I would use a stop loss. It would just be a long way away, but I would have stops in the market because that's the best way to do it. And Larry Williams has got stop strategies as well. But read his books. You should read all books, everything, because you'll suddenly realize that there are 1,000 approaches to trading and 1,000 approaches that don't work for you because no one can do it the same way and make money. If you followed all Larry Williams' strategies to the T, at some point you'd screw it up. And it's not because of Larry Williams' strategies, it's because of you screwing it up. Because you would have a month where you didn't make any money and you'd need to pay the mortgage. Most successful traders are the ones that don't need the money because they concentrate on the process of trading, not on the actual finances, which is why we work with percentages. Yeah. If you work on percentages, it doesn't matter whether you're trading $1,000 or $100,000. Yeah. The percentage increase on the account is the percentage increase on the account. If that's what you focus on, returning a positive that, you will always make money. If you focus on making money, you will have points where you're sitting in low profit, and that will make you go off and system hop and do all sorts of stuff, which is why we don't focus on pips, we focus on percentage return. And again, that's from Larry. Everything is an ROI, return on investment. Everything in trading is a return on investment. The banks use ROI. Everything uses ROI. Nobody uses pips. Nobody uses dollar amounts. They all use return on investment because you can only measure your portfolio on a return on investment. So there you go. Do you think 100K is enough to make a living trading that daily strategy? At 40% ROI, that's 40K a year. Yeah. You won't make 40% though. You won't make 40% return a year. This is what people miss. A consistently profitable trader doesn't make 40% return a year on a daily trading strategy. You have to use higher risk parameters to make that sort of money. So the smash bar strategy is looking for somewhere between a 7 to 15% return. Yeah, no more. Because you're trading daily, right? So if you're getting in on a daily time frame and your trade takes 10 to 15 candles, 20 candles to play out, which it can do at times, that's a month. One trade takes a month. If you make somewhere in the region of 1 to 3% return on a trade, right, after risking 1% on that trade, and you take 12 trades a year to 15 trades a year, you're never going to get a 40% return. You're going to have losers in there. So you're going to take a trade and it's going to lose. And it's going to take 4 weeks to lose. Then you're going to take another trade, and it's going to take 3 weeks to make a profit and get you money. So now you're up 1.5%. Yeah. But do you think Warren Buffett gives a monkeys when he's investing 20 billion into the market, whether he makes 3%, 5%, or 10%? No. And this is why Warren Buffett and in successful traders like Larry Williams trade the S&P 500 and trade the stocks and the commodities, because they're predictable and they have virtually a guaranteed return. As long as there are businesses in the world, businesses will make money. As long as businesses make money, stock investors and business investors, board investors, need to show a profitable return. As long as there is a market, there will be an S&P index of stocks that go up. If stocks go down, companies go bust. Therefore, the stock market is a self-fulfilling prophecy. This is why the stock market does what it does. That's what it's going to do. It's going to go up. I can guarantee it, because if it doesn't go up, all the businesses in the 500 biggest companies in the US are going to go bankrupt. They're not going to. It's going to go up because they will start to cut staff. They will change the way they do things. Something will happen. They'll increase their prices. They'll drop suppliers. They'll do all sorts of stuff. But that will happen. That will happen. And that will happen. We'll have bubbles where pandemics will hit. Financial crises will hit. Housing market problems will happen. But at the end of the day, this thing will go up. They know that. That's why they trade it. If the S&P can return on average 8% a year and you can return 15% a year, you're doing better than the stock market. That's all you need. But you need money to do it. That's why I say there's no point in me putting a daily EA on the marketplace, because no one will be interested in it, because no one's got enough money to make money out of it. I could make 100 EAs right now that have got a 5 to 10% return a year. Useless, unless you've got 50 to 100K to put into each one. And in which case, then what are you going to return? 5 or 10 grand. Not enough. You can't pay yourself on it. So we drop down to smaller time frames like the 4 hour and the hourly, and we get burnt by not getting the direction right as accurately, which is what we call drawdown. And that's what most professional or profitable traders are typically doing. Mr. Striker, which is good, sir? I don't know. Everything's good. Brian, I'm going to dive into Mr. Williams's books. Yeah. You can fine tune the market reverse alert. Yeah. You can fine tune this to have virtually no drawdown. So you could run the H4 M15 strategy, yeah, and make a profit on virtually every trade that you take throughout an entire year. And you could have your drawdown stay within 10% for the entire year, virtually no problem at all. If you were happy to take a 3 to 5% return a year with a 10% drawdown. If you look at most investment firms and investment funds, pension funds, those sorts of organizations that are heavily involved in FX trading and stock trading and commodities trading, they will have a drawdown on their portfolios of anywhere between 15 to 25% a year. Yeah. The norm. That's the norm. But they will promise their investors a return of around about 10 to 12%. But you're getting a negative risk reward ratio. In these pension funds and investment funds get a negative return because their drawdown is higher than they will return their investors, because they can't control the market. So you could easily do that with the market reverse alert CA, no problem at all. If you were to trade like D1 RSI with H1 reversal alerts, you would have a very, 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 very small drawdown, and you would easily return, 1 or 2% a month, probably, maybe, with virtually no drawdown at all. But what sort of size account are you going to need to do that with? This is always the problem, isn't it? And this is what the prop firms are playing on they are feeding on your I need money to make money, therefore that's where I go and get it. But their rules restrict you from trading the timeframes that you can do that on. So you have to gamble on the lower timeframes to get the accounts to move them up to the higher timeframes, which is where the long-term money, if you like, is made. Larry Williams' books are brilliant for that. It's all just logic at the end of the day. It's maths, simple maths. Which of the strategies do you recommend to trade on a prop firm? Up to you. They will all work and they will all fail. If you're using position trading, they will all work and fail. So in March, the ADR reversal EA, I think, made 26% return, and it got to around about 3 or 4% in drawdown. This month, we've returned 10%. We haven't got anywhere near it, actually. I don't think we've got anywhere near 5% again this month. So again, this month, ADR reversals, brilliant. But you're going to get squeezed on ADRs some point, and it's going to hurt. H1 mean reversion did a lot in March, and it's done nearly 10% this month. It had done 10% for today. But it's sitting in 7.4% of drawdown at the moment. This is trading every pair as well, yeah? So this is not what I would recommend. Don't trade every pair, because your exposure is well over the top, look. But if you look at this list here, there's nothing in danger here. Yeah, 0.74 on the pound Swiss, 0.97 on the CAD yen. There's nothing here over 1% in drawdown. There has been, and we've scaled out of some of it. Yeah, so you can have the EA trade on prop for you within regulations and within their rules very easily by dropping the risk. However, you probably won't pass it in 30 days. Some months you will, some months you won't. There is no, I said it in here, I'm saying it all the time, don't I? There is no way to control the market. If the market is going to squeeze you, it's going to squeeze you. If it's not going to squeeze you, it's going to make you a lot of money. You don't have any choice. It gives you what it gives you when it gives it to you. That's why I can't say how much you'll make with anything. No one can. It's all just random movement and maths. So all that the EA does and all that my strategies do is they use maths to get in and out the market so that you get a net positive return. What you're going to get, 26% last month. I can't remember, was it 68? Can't remember the exact figures on it, but this bloke's selling stuff on e-commerce. Good luck. Oh, go back. Stop. There you go. So that was March's results. So the ADR set file did 26%, drawdown 10.3%, but that isn't open drawdown. That is drawdown on the account, including, and that's actually wrong, isn't it? We figured out that these drawdown figures were totally wrong for some reason. The maths was wrong on the quant analyzer. So these figures aren't actually correct because the H1 hedge did way more than 0.26%. But you can see the returns, look. 26 grand off of 100K. So that's 26% return. That's 17% return. That's 8% return. And that's 16% return. So you would have passed evaluation on a 100K account 3 times over with the ADR set file. Yeah, you'd have passed it twice with H1. You'd have passed it twice with hedging. You'd have passed it once with H4. That was March. I can't tell you what's going to happen this month, and I certainly can't tell you what's going to happen next month. But if you were to drop the risk down from 0.2 to 0.1, you'd take half as much drawdown and make half as much money. So you don't know what you need to do, though, each month, because you've no idea what the market movement's going to be, what's going to squeeze, what's not. There is no way of telling. RSI, as good as RSI is for prediction when we're going to get potential pullbacks and reversals, it gets it wrong a lot. You got to use something. Yeah, use CCI, use MACD, use whatever you like. At the end of the day, nothing is going to work consistently. And if you use a stop loss, you will get stopped out a lot. And you'll do an awful lot of retakes. With strategies that use a stop loss in prop, you will have an awful lot of times where you will be getting very close to passing an evaluation, but running out of time. So you increase your lot size, and that's when you get hit. And they know that. They're not silly. Which is the EA? Which EA is the one you have on the screen right now? So this is the market reversal alerts EA. So all these accounts are running variations of the market reversal alerts strategy. All on there. Well, there's links going down here all the time. The website, everything you need is on the website. I'm trading reversals at the moment with leveling positions. Seems nice, but sometimes I have about 6 to 7% drawdown. Leveling. That's all I do, Jord. What you call leveling, I call position trading. There's a whole bootcamp on it here on the website, which teaches you exactly how I do it. And I use the EA. My EA just does it all for me. Why is the website so slow? What is going on with the website? Yeah, it's all on the website basically. But position trading, yeah, is what you. I don't know what's going on with the website at the moment. It's gone into go slow mode. There you go. So that's five days, I call it, but it's not. It's five videos, about ranging from 1 to 3 hours long. Those videos. But yeah, position trading. So you can see here on the euro pound. Yeah, shorting it basically at the moment. There's the average. So it's basically dollar cost averaging. Again, if you watch the Bloomberg channel, you will see investment firms and heads of bank desks coming on, being interviewed, talking about dollar cost averaging strategies. This is what they do. They dollar cost average. They don't get out because the market's gone against them. They get in because they know that the market's going to come back their way, because the market does that. And all the time the market is, if you'd have bought there, right, and just bought, you'd have got out. If you'd have sold there and sold, you got out. If you'd have bought there and bought there, you got out there. If you'd have, you get the point, yeah? I'm selling it here. It's going to come down. I'll get out when it comes down. I don't take a loss because the market's gone against me. I get out when the market goes my way. It's flipping it on its head. That's why it works, because no retail crowd are taught to put an order in the market to get them out at a loss. You remove that, you won't get out at a loss. You'll get out in a profit, because the market will come back in your direction. You just need a management, a money management, a risk management strategy that keeps on top of the drawdown when you're not right. So when I'm getting into a trade, I am either right or I am temporarily wrong before I'm right. I'm always right. Every single time I get into a trade, I'm right, bar a few odd times where it just something goes parabolic because something's going wrong. But I'm always right in the end. I just can't time the market because I don't steer the ship. So, it's like getting on a train. I liken it in the boot camp to getting on a train. Yeah, you get into a train here. There's a stop there and there's a stop there. Which way the train is going, you don't know until you've got on there. If the driver decides to get in that end or that end, it's either going to go that way or that way. You don't know. So you get on the train, and if the train goes the opposite direction to the station you want to go in, you just get in again and wait for the train to come back. These areas, what we call propulsion gaps, are where the market trades to and from. You can see every time there's a propulsion gap in the market comes back and fills the propulsion gap. It's what the market does. It hunts liquidity. Liquidity is large orders in the market. Large orders in the market leave propulsion gaps. These are the footprints the banks use to move between level and level. So you know where the market's going, you just don't know when. So if you stop trying to time the market, you will immediately get it right. But you can't time the market with a 1% risk, because if you get in with a 1% risk and it goes against you for 2 weeks on the trot, that 1% risk is going to turn into something like 30% drawdown on your account. So you get in with a lot size relative to your account. That means if it moves against you by its average daily range, you're only ever going to be in something like 0.5% of drawdown on your account. So you're just grabbing small bits of money over and over and over again, not when you want to, when the market goes your way. That's the difference. And that's why we do what we do, because, and as you say, you call it leveling. I call it position trading. Some people call it dollar cost averaging. It's exactly the same process as the banks, institutions, pension funds, and hedge funds use. They scale in and out of their positions. They don't get in and get stopped out because they got the wrong direction. They don't know which way it's going. Yeah. If you work in Barclays Bank, you are one of 10 that moves the market. If Citibank and Credit Suisse are trading against you today in the opposite direction, and you're on Barclays, you're going to go into drawdown. You haven't got there's nothing you can do about it. If you're sitting on Barclays' desk and you've got 25 million account to execute short, and Credit Suisse and Citibank are going long 50 million, you're going to get run over. Nothing you can do about it. You can't go, actually, can have another 25 million. Well, not until you got that back in profit. No. Yeah, they get run over. Do you think they stop out and lose 25 million, or do you think they wait for the market to come back in their favor when the other banks have stopped executing their orders? Yeah. Well, that's all you're seeing on the screen here. Banks executing large orders. Large order execution, back. Large order execution, back. Large order execution, back. Large order, back. Large order, back. What the banks do. So when you know where it's going, but you don't know when, if you can eliminate the timing element, you're going to be right most of the time, aren't you? So stop trying to get it right. Stop trying to time the entry. Just get in and wait for the exit. All of a sudden, it becomes a lot easier and less stressful to do it. However, you will get run over sometimes. But then you get run over 9 times out of 10 if you use a stop loss anyway. So what's the difference? We just don't get run over 9 times out of 10. We get run over 1 out of 10. So you're flipping yourself into living in drawdown instead of living in loss. Living in drawdown is fine, because all drawdown is unrealized profit in the future. There you go. Whoops, wrong button. Anybody that's been here for a while knows that anyway, don't they? So, do you share your settings? Yeah, they're all on the website. So if you go onto the Market Reverse Alerts EA, there are set files linked, test results, the manual, videos. You'll find everything I do is described to the nth degree. Always fascinating to listen to my huge knowledge, my huge brain. It's not a huge knowledge, it's just a realization, I guess. I love the fact you're unlike 99% of other YouTube traders. That's good. That's why I make money. Because I do it in here for real and show it, whereas everybody else is doing it in hindsight or sending you screenshots and then forgetting. As I've just found, one of the guys that I've been following recently in one of his channels posts a lot of trades and lots of results, and happens to forget about the ones that don't work out. And you're suddenly looking, what happened to that trade? He hasn't mentioned it for weeks. Wonder why. But that's what the industry's like, isn't it? Right, I've got to go because I've got a spin class to get to. So I will be back tomorrow at 2:20, same time, usual, for the New York session. I'll be back tomorrow morning for 7:50 for the London, Frankfurt session. Not going to make any money out of this today. This thing's chopped me up 3 times. So, and I'm not short because the short breakout was way after my cut-off time, which is an hour and a half in. So I'm not made any money on the Dow today. NASDAQ, very much the same. You'd have made money on the NASDAQ shorts today. Quite possibly, but it did pull back a lot. So you may have got stopped out on the pullback and not made anything on that either. So very bad index trades today. So, but yeah, I'll be back tomorrow. We'll have a look at obviously how everything's going. ADRs, obviously today, you've got a few to get into there. Your oil traders triggered short. So there's a potential short run on that. And we'll obviously see how everything else is going. But at the moment, we're just sitting in a few squeezes on stuff, waiting for things to play out. So we're waiting, which is what we spend most of our time doing. All right, have a good day. If you need anything, I'll be in the Telegram group as usual. Otherwise, be back tomorrow morning, 7:50 and 2:20 tomorrow afternoon for New York. Have a good one. See you then.